My name is Tatira Junaida. I'm a reporter at Newsday. What you do?
So my name is Gerald Gondo. I'm Managing Director of Rescura Zimbabwe. Rescura, we're investment consultants and investment advisors, primarily to pension funds and really with anyone who's got a liability that they want to save towards. We capacitate them and give them tools to enable them to save towards that investment goal.
Okay. So speaking on what we're to expect tomorrow, and I was going through the program. You talked about 9 investment regions for the African continent. First off, before I go more specifically into Zimbabwe, which of these 9 regions have the most potential for rapid growth for the continent?
Sure. So I think globally we are in a very interesting place and time in that we've just come off what was called I guess you could call it a commodity boom, where China was willing to buy anything and everything in the world in order to keep its economy going. And Africa was a big participant and beneficiary of that. But in our view, from a Rescura perspective, we chose to look at Africa in terms of not necessarily whether it's a South Africa or Nigeria in terms of big economies, but rather more in terms of regions. And regions that share commonality in terms of geographic, in terms of culture, in terms of language, and in terms of historical trade similarities. And we came up with 9 regions that make sense, of which some of them are Central Africa, East Africa, Sub-Saharan Africa, Nigeria on its own, South Africa on its own, the Maghreb and Egypt, etc. And what was very interesting for us is that where countries and regions share commonality in terms of culture and language, you find greater trade. So at this point in time, going back to what we're experiencing globally, you are in a place where, say for instance, oil has come off from high hundreds to around $30 or $40 per barrel. And for those countries that were net oil exporters, they're obviously receiving less export proceeds. The economies have slowed down, so you're seeing less growth and stagnant growth in areas like Nigeria. But you also see in areas like East Africa and to a certain extent Sub-Saharan Africa, such economies are actually benefiting from a lower oil price, less inflation. A large proportion of what they import constituted oil, so those economies are actually growing. So from our perspective, certainly within the last 18 months and for the foreseeable medium term, East Africa is a big growth area. We also have the view Sub-Saharan Africa has good growth potential as well. If you look at, say for instance, the gas finds in Mozambique, which are globally phenomenal, those are strong enablers of growth that we're seeing. Areas like Nigeria are obviously going through humps and bumps in terms of the Niger Delta area and them trying to control the upheavals there. But in our view, you are likely to see sustainable higher growth targets for the likes of East Africa.
What would you say, considering what you've just said, what would you say has been the trend in the investment climate, opportunities? And why would you say that is the trend?
So I think globally there's a quest for yield. You find your developed nations have entered into a low growth phase. So if you're recording 1% growth nominal, you're doing very well in a developed world. Whereas Sub-Saharan Africa and Africa in itself, recording 2 to 3 to 4% nominal growth is actually a slowdown from what was experienced before the commodity boom. So in our view, you will find that quite a large proportion of developed capital flows are going into the private equity space, and private equity is really looking at large infrastructure projects. So road, rail, energy are big themes that you're seeing global money flowing into. And in our view, those are substantial enablers of growth in Africa for the foreseeable future.
So now when you look at Zimbabwe, the current state it's in, when you're sitting somewhere in Europe or in America and you read and you Google up in Zimbabwe and you say that cash crisis, what.
Yeah.
Obviously people, the reaction, normal reaction, if I was an investor, would be, okay, let me keep my money in my pocket for now. Let's just see what happens here. So with that said, where do you think Zimbabwe fits in the current investment climate? And what do you think the key enablers would be to improve on in Zimbabwe to try and get into a better investment space than where we are right now?
Yeah, look, I think Zimbabwe is in quite a difficult space at this point in time. So you've had El Nino, which has affected our agricultural sector, and we've had a slump in terms of commodities, so all our mineral exports have also taken a hit. So it leaves you in a space where you actually have to compete for capital. What is going to make this a more impressive or more amenable investment destination compared to, say, a Zambia or a Mozambique or even a Malawi or a South Africa? And I think as a Zimbabwean, sitting in Zimbabwe and trying to assist long-term savers and pension funds and insurance companies, and also speaking to international investors, I think Zimbabwe must focus on the quick wins. So things like, we are a peaceful country. Sell those things that you are not worried about terrorism crisis coming up in Zimbabwe in the foreseeable future. Peace brings about stability, and we need to sell that. A second enabler would be, we are a central supply hub from South Africa to the northern parts of Africa. It's very difficult for you to circumvent Zimbabwe. So an easy win would be, let's prioritize fixing the roads. Let's prioritize dualizing certain roads that are key trunk routes for a lot of the commodities that need to flow from south up to north. And then lastly, a consistent policy environment. Generally, we're talking about infrastructure being an enabler. Building a dam, or building a power plant, or building a road. So investors in those types of assets do not want uncertainty for 10 years or 15 years or 20 years. And what that compels us to do as Zimbabweans is really to ensure that our policy framework speaks to that, speaks to certainty, not for one election cycle, but for 4 or 5 election cycles. That's really where we are going to differentiate ourselves as Zimbabweans.
So with that said, what key enablers in Africa should Zimbabwe be aiming to be part of, if I can say?
Yeah. So, a case in point and an example we often use is look at Mauritius. It's an island country. Historically, it was primarily a sugarcane exporter and has repositioned itself as a financial services hub. Right? It's also repositioned itself as an efficient tax destination through its various double taxation treaties. That's not to say Zimbabwe should follow the same route, but it certainly gives us the prospect of being able to position ourselves to say, with our African neighbors, what is it that we can offer that gives us a competitive advantage? So again, if a shirt needs to go from Durban to Lusaka, does it need to travel through Zimbabwe? How do we make it easier for that shirt to travel through Zimbabwe? Similarly, so where is the cotton coming from for that shirt? Is our environment and is our climate, does it lend itself to growing cotton the same way it lends itself to growing tobacco and other added value crops and outputs? Let us lend ourselves to our regional neighbors to say, you don't need to look for cotton elsewhere. Grow it here. And you can grow it here with a more competitive tax dispensation. You could grow it here with incentives for you to start processing some of the cotton to lint, etc., etc. So I think in terms of our outlook within Africa, we actually need to lend ourselves to our neighbors for them to leverage the resources that we have here.
Lastly, I was explaining this to Mr. Wiley before you came. UNECA said that this part of the continent is going to record the the lowest growth. Don't know if you know that, but with Southern Africa, the lowest. So, it's, of course, when you talk about investment opportunities, we have to jump to those opportunities, but are they there?
Certainly. And it also, we always say to our clients who are long-term savers that you need to also always keep into context your time horizon. If you are speaking to 2% growth for the next 3 years, whereas you're trying to match liabilities that are only going to come to maturity in the next 20 years, 2% growth in US dollars for the next 20 years from a toll road is fantastic growth. If you look at it in the global context, where keeping your money in a Swiss bank account, you're actually paying the bank to keep your money there. So, one, context is key, and secondly, we need to ensure that our investment horizons are aligned. And another key example is look at the demographic dividend that we have. The average age of Africa is less than 30 years old. So those are people who are going to be economically active for at least the next 30 years. If you are growing at 2% or if you're growing at 5% for the next 30 years, again, that's compounded growth is phenomenal. So we take that with a pinch of salt in terms of saying that you need to ensure that the investment horizon is correct, and more importantly, Africa is already only starting to come into its stride. So there's a lot of development still to come.
Thank you.
Thank you.
Yes, thank you.